Hey guys, good evening everybody. Welcome to another edition of the Accessatrader.com nightly wrap-up show. Hope everybody is having a good day. Hope everybody did okay today. I didn't. Okay, we'll get to that in a second. I just didn't do it. Anyway, let's get into the market. Just a crazy February, right? Crazy February. We started out like a house of fire. Continuing this massive, just a really destruction of short feces everywhere. And the first week, it looked like this market was never going to go down, only followed by one of the most aggressive sell-offs that we've seen in a long time. Not because there was some sort of materialistic value behind the sell-off, it's because gravity took over, and gravity, well, whatever goes up must come down. And so we saw this destruction of equity prices over and over again. We saw the two biggest point totals in the Dow Jones Industrial Average on the downside within 72 hours of each other. That's pretty special, right? It's pretty special. And just as fast as we've gone down, what started out as a dead cat bounce that we talked about, this whole area here, was actually a very important materialistic, fundamental, technical, whatever you want to call it, area into the market, turned back into a market that right now, again, has really filled in 75%, right? 75% of where the selling has started, and now we look incredibly well. So we talked about over the weekend, we talked about Friday how we are oversupply, and now we're looking at higher prices. And the Dow was up, big today, 400 points. And we had this kind of a topic of conversation in the room today. And it kind of got me thinking, if you guys remember, like the Nikkei, right? Once it started just trading in these warped areas, 25,000, like these huge numbered denominators. Once the Dow Jones got over 20,000, you started seeing those days of up 30 points, down 30 points kind of irrelevant. And they started shrinking, really shrinking. And now as the Dow is growing in price per share, right? 25,000, 26,000, 27,000, you're going to start seeing exactly the same thing that happened with the Nikkei. You're going to have to see 200, 300, 400, 500 point moves daily, and it's not going to be called volatility anymore. It's going to be called normal, because again, the growing aspect of the Dow Jones, right? 25,000, 26,000, 27,000, the percentage gains, percentage movers of these 200, 300, 400 point moves become kind of normal, okay, kind of normal. And the second thing we talked about was, Joe, our Squawk Box, said, well, the volume is not as good as, it should be, or compared to this, that, the other thing. And the more I thought about it, it makes sense. The higher we go in price, right? The higher we go price in Amazon, in Google, in Netflix, in Tesla, in Baidu, in Boeing, in Facebook, and so all these high beta names, all these high flyers, the diamonds, the spies. Liquidity, it's almost irrelevant. The volume is almost irrelevant, because the higher the stock price goes, the less amount of chance that retail can participate. So of course you're not going to see the same volume on Apple. You're not going to see the same volume on Apple at $120 as you are going to see at $180. Again, not everybody has the ability to start buying stocks up at $100, $200, $300, $800, $1,000, $1,500 a share. So what we've been talking about, the volume of this market, I think it's irrelevant. I think it's completely irrelevant. I think the scoreboard, what we've been talking about for a long time, that becomes irrelevant. The only two things you have is, well, actually three things you have, is the ability to read market sentiment, your process, and how the process spotlights for a specific day. So for example, the month of February has been really good, right? Really good. Last week was one of my better weeks I've had. Crazy active, incredibly active, because my process was spotlighted because of these ranges. When you had a day like today, right? When you had a day like today, everything that I wanted to do off the watch list gapped up. And I'm not talking about gapping up 50 cents, 60 cents. Everything is gapping up $3, $4, right? $3, $4. So the value, right? The value of the tier game for the day was gone. It was gone. So once I missed my initial window, okay, once I missed my initial window, it was over. My day was over. And I had a choice. I could have been very patient and sat there and just said, well, you know what, I've done very well, this, that, the other thing. Friday, I put up, 8, 9 trades. The day before, I put up 10 trades. Everything was, Wednesday, I put up like 7, 8 trades. Everything was very, and today it kind of played out to where I believe the biggest fault for every single trader is. And that fault is, no matter how smart you think of you're a trader is, no matter how long you've been trading or how talented of a trader you are, the most important part is if you don't trade your premium hand, right? If you don't trade your premium hand and you don't get that mindset that just because the market's open doesn't give me the right to allocate capital, if you start putting on trades for the sake of putting trades, well, you're not going to make any money. Okay, you're just not going to make any money. I don't care if the market's up 1,000 points. If the meat of the bone is completely off, right? If the meat of the bone is off, and all you're doing is fighting for the sesame seeds off the bun, right? You're giving yourself an absolutely worst case scenario right from the word go. And today was just one of those days for me that I just couldn't get it going. I just couldn't get going. Everything that I put on rallied up a little bit, came right back in. I had several break-even trades. I had 2 trades that I put on. God knows what I even put on. One was a complete, like I gave away money on a Baidu short. Don't even ask me why I even put on the trade. It had nothing to do with the PS60 theory. It had nothing to do with anything. I just put on the trade and donated money. Now, again, I lost money today. Did I lose a lot of money? No, I didn't lose a lot of money. The point is I traded like an immature new trader that has never seen the sun, the light of day, that has never been in the trenches. I put on positions today for the sake of putting on positions, not because they were value trades. I put on the positions because the market was open. And I say this all the time, I say this in the room, if I could eliminate these type of days, and again, my loss wasn't big, okay? I've been on such a big run. Look, it's irrelevant, okay? It's not to the point that I can make it back with a 50-cent move on Tesla. It's irrelevant. It's not the point that the loss was big today. The point was the loss could have been avoided. Once I missed my window, I should have just sat there and waited for value. Once I said there was no value left in the day, I could have just turned around and said, look, let me just watch the order flow. Let me build my daily pivot, watch potential for tomorrow. Well, let me watch order flow. Let me sharpen up my skills in other way. And I didn't do that. Okay, I didn't do that, and it resulted in a day that wasn't frustrating. It was just a scenario of I could avoid it. Again, the biggest thing that we do to ourselves, okay, which the market cannot do to us, because again, the market doesn't care if we're alive or dead, if we're breathing or not. The worst thing we could do to ourselves is shoot ourselves in the foot. And I said, if I could eliminate 10 to 15, even 20 trading days, right? If I could eliminate 15 to 20 trading days a year like I did today, again, relatively small loss, I would have a good amount of money allocated towards the end of the year that I could do whatever I want with. But again, we are human beings, and it really does show if you don't bring your A game every single day and you lose that focus, right? You lose that mental edge, not even to the point of edge of process. If you lose that mental edge, you're going to put yourself in a position to fail. And the only question is, how hard are you going to fail? Are you going to fail miserably, right? Are you going to fail modestly? Or are you going to say to yourself, look, at some point I got to cut myself off. I'm not getting cards. I'm getting that 2-7 offsuit we constantly talk about. Let me muck that hand. Okay, I lost. Let me muck that hand. Let me wait for the next hand to play out. The next hand is only a day away. It always is. The next hand is always going to be a day away. So instead of continuously playing that 2-7 offsuit in the hope that you hit some good turn cards, be a professional. Be an adult. Be a professional. Muck the cards. Tomorrow's the next day. And instead of taking some paper cuts, which basically I took today, instead of taking some paper cuts, right, don't turn it into a severed head. That's the name of the game. You cannot put a Band-Aid, right? If you chop off your head and shoot yourself in the foot and all that good stuff, I promise you, you cannot put that little thin Band-Aid on your head to make your head grow back and you to be in one piece. So the mature trader, right, the mature trader, the educated trader, the intelligent trader always mucks a bad card. I was lucky that my paper cuts today didn't turn anything more. And the most important thing is I continue, and this is almost 19 years into this, guys. I continue to learn my lesson every single day over and over again. Whether I apply my experiences on the days that I'm getting bad cards is a whole different story. But again, we're human. We're going to make mistakes. So kind of get that out of the way. Tomorrow's a new day. I think tomorrow we'll have a much smoother experience. I really like to watch this. We'll get into the watch list in a second. I really like to watch this for tomorrow. I think we continue to go higher. I think we continue to fill in this whole gap here. I think we have a very, very unusual situation that the market continues to grind up, right? Grind up. And one thing that I did see, I saw a lot of stocks today. I know the market was strong, but I did see a lot of stocks today had a lot of effort. I had a lot of effort going higher after the initial move. Matter of fact, if you take a look, you'll see how Amazon, for example, for the exception of the initial move, right? Here's the initial move. Until that last candle of the day, it had 4 candles of downside. Nvidia, until that last candle of the day, had a lot of downside. Same thing with Alibaba, right? Same thing with a lot of Alibaba. Same thing with Facebook. Take a look. Same thing with Facebook until it started rallying. So again, this is where the value comes. So if the stocks that I'm participating in are not going to be strong, then that's where my tier system really starts to contract, and all I can do is wait for the whole card. So I kind of learned my lesson today. And again, this is what's great about the live webinar, guys. We don't just talk about rah, everything is great. Everything has been great. But the point is, you are going to have days that you can't get going. You really need to have a short memory. Don't take it over, don't take it mentally over to the next day. There's no point. It's part of what we all signed up for when we opened up our first brokerage accounts. The good, the bad, the indifferent, the ugly. We just try to get rid of it, omit as much as the turbulence as possible. So let's go into tomorrow's session. Obviously, it's bullish, okay, very, very bullish. I really like some ideas. Let me talk about some ideas that I do like. Let's start off with IBM. Okay, let's start off with IBM. Here's the chart on IBM here, guys. You can take a look here. It closed above the 50-day moving average. Why is that important? Again, if you believe that stocks go from supply to supply, it's very important that stocks confirm supply. Keep an eye on IBM, guys. I think a break above the 159 level will get this thing going. Closed at 158.58, so your risk is less than 50 cents on IBM. If it gets going, you could start filling in some of these candles as well for a potential move to 162. Goldman Sachs, Goldman looks ready to go. Goldman looks ready to go. Take a look at Goldman Sachs, guys. The top of the range here is 273.80. Keep an eye on this thing, 273.80, 274 for a possible move into the 277s. I think Tesla tomorrow will finally. Break above the 1123 highs. 2 ways to play it. Today's high is 259. Why 359? Why is that important? You can see the flag here on the 60-minute. If it takes out the 59, you'll see this Bollinger Band rise. So you can play it 2 ways, either through 59 or a break above the 1123, the January 23 highs of 60. What was it? 360.50 for a possible move to 363. 364, that looks good as well. I think Win is ready to go. This is the same chart as IBM. It got rejected today on the 50-day moving average, as you can see. If Win can get above that 170 level, guys, okay, if it can get above the 170 level, there's a shot it gets to 173, 174. If you guys remember last week, we traded Win a couple of times. There was $10 out of the money calls being traded. I think it was the March 175s. There's a shot it gets to 170. It could get to 175. Very, very good setup there as well. Square reports tomorrow. Look at the flag here, intraday flag, the 60-minute chart. If it could get above 46.85, 47, you could get a trade of ahead of earnings. I don't think it's going to be a huge trade, but you could get a move to the 47.5. 47.80 levels, so keep an eye on that as well. A couple of smaller cap names I want to give you guys. TRXC, for all you guys who are trading the small cap names, had a huge move here, huge move here in October. It's oversupply. Keep an eye on this thing above that $2 area. $2 move, you should get your first push to about 215. Look at ARWR. You'll notice in tonight's email, the options flow report, their options traded. I believe somebody bought the September 5 calls 300 times. Okay, actually that's in the money. Nevertheless, watch this thing off the 675 break. That looks good. Also, keep an eye on FAMI. FAMI is a recent IPO. Okay, recent IPO. Keep an eye on this thing above the $7 level as well. So look, as much as we all want to think we're great and we're geniuses and we're this, that, the other thing, again, every single trader runs into a buzzsaw. Today, again, fortunately, the buzzsaw didn't cost me a lot of money, but at the end of the day, again, it shows we're all human. Guys, have a great night. Stay calm. Stay focused. Mentally strong. Every single day needs to be mentally strong. And the most important part, stay patient, trust the process, and God's will. I'll see you all tomorrow. Take care, guys.